All right, guys. So look, I'm going to keep it completely real with you. If you're still struggling as a trader after years and years of learning and jumping from strategy to other strategies, and you finally just need one that you can rely on, this video is going to be that answer. What I've gone ahead and done is broken down this entire mechanical 1 to 3 strategy from start to finish. So we're going to go through every single point. But one thing I need from you is to pay attention throughout this entire video. If you're going to be busy, watch it a bit later, because I'm going to take you through an actual testing stage and break down every single live trade to show you what it actually looks like in real life. As you can see over here, pretty much we've got an overview of what everything looks like with a few trade examples as well. Now this, just testing it on a random month, for example, will get you something around a 60% win rate with a decent, 5 wins, 3 losses, and 11 risk to reward made in that month. But before we get into everything, let's actually clear something up. Trading is not about the perfect strategy. I'm pretty sure most of you have realized this already. You've bought courses and you bought mentorships and everything, but for some reason it still doesn't stick together because there's a lot more to it than just a strategy. Think about it. The step number one is once you find the strategy that actually looks decent, what you're meant to do is you're meant to go out and test it, refine it further using data. And once you test it over years of data, only then can you prove that it actually works. So many of you skip this hard part and just go to the final point. Number 4, you proceed to demo and small funds. And then finally, that's where you go onto the bigger prop firm funding. A lot of you have probably failed challenges, and that's why the statistics from these prop firms look so profitable for their business. And it's because most of you are skipping these 2 main steps. It really comes down to this testing stage. Now, I can't emphasize this enough. When somebody comes into, even for example, my own mentorship or something, I make it a requirement. They have to test years of data to proceed onto the next phase. And that's not because I don't think that they can do it or whatever, but it's simply because they need to get the testing done before they can get onto the live markets and think about actually making some money. Now, let's actually look into the different types of methods of how people used to test before and now. Before, I'm going to be honest, especially when I started out as well, it was all about Excel sheets. This is what me and multiple of my other peers have started on. I'll be honest, it's very long and tedious. There's a lot of refining that goes into it because sometimes you might lose some data. It's not very visual. You can't actually see the trades that you've gotten there, and there's no analytics at the end of it as well. This has all changed with platforms like FX Replay and a few others. They're very quick and easy to use. They're very visual, so you can actually look at a journal of every single trade that you've taken. And also, it's got high level of analytics. So I'm going to show you all the analytics that came to this strategy as well. And we're going to see every single breakdown. How was it on a Monday, Tuesday? What session was better? All these types of things really, really come and play into it. Now, just to show you how serious I am about this, I've personally, or me and the team have personally done just over 35 years of data on this one FX Replay account. Now, it's just to show you, look at that, almost 10,000 trades taken and 16 days, 16 literal days, 21 hours and 4 minutes spent on this platform itself just to get to certain results and everything like that. So it's not going to be an easy game. It's not a thing where you just learn a strategy, think it's profitable and go out and test and go out and put it in the live markets. There's this bit in between where you have to make sure that you're consistently testing. Now, my point here is don't waste your time jumping from strategy to another one, but actually test the one that you stick to and see how well it does. I personally feel like most of the people actually fail in trading simply because they don't stick to it for long enough. Now, the platform that I'm going to use throughout this entire video is going to be FX Replay. They've kindly partnered up with myself as well. So very, very helpful from them. And they actually do offer a complete free trial below. There's going to be some giveaways, so join the Telegram, join all my other social medias as well, and you're going to be seeing what's going on. But use the code Diamant Capital. That's going to get you the best deal possible. It will give you literally the biggest discount you can have. Now, let's get straight into the strategy. So this right here is literally just an overview of what everything looks like. It's a 1 to 3 risk to reward mechanical strategy. I'm going to be completely honest, it's about 90% mechanical. The only thing that's a bit discretionary at times is the actual candle that you enter on. Now, this could be made mechanical, but one thing I realize is if you keep that entirely mechanical, there's not many times where you actually enter the market because of sometimes it does take a bit longer. Anyways, this is the strategy outline. Step number 1, we wait for our Asia range to form. So this is going to be between 12 o'clock to 5 o'clock UK time and around 7 p.m. to 12 midnight EST as well. Now, with this, our Asia range must not be too expansive. So what do I actually mean by that? We can't have it being completely expanded to the upside or to the downside. It needs to be ranging and it needs to be quite tight. Step number 2, we only look for one sweep of Asia. 2 sweeps is going to mean the strategy has been invalidated for that entire day. We then wait for a minor change of character. This could come in the form of a 5-minute piece of structure, a 1-minute piece of structure. This, to be honest, is not the biggest thing, but really it's about the pullback. And that's step number 4. When we wait for that pullback within the London kill zone, reminder, this must be between 8 to 11 a.m. GMT or from 3 a.m. all the way up until 6 a.m. EST as well. With that, we'll be able to follow it fully within this strict time window. So this is pretty much the London kill zone. Once we see that pullback, we then wait for the strong engulfing candle to form away from it. And then finally, that's when we get into trades like this. Now, if this is a bit confusing for now, don't worry, because I'm going to review every single trade that I've personally done as well throughout this entire month of testing. But that's pretty much what it looks like. Now, just a few key things here as well. There's one little rule that you must keep in mind. With our sweep of the low, it cannot be overextended. So what do I mean by this? If our Asia range, let's just say, was only about 10 pips, our move away from the end of Asia range must also be 10 pips. This ensures us that pretty much the liquidity sweep is actually a liquidity sweep rather than breaking out of that structure completely and continuing in the same direction. So this is basically what the strategy actually looks like. A few key examples, you can see the exact thing. Asia range, sweep, minor change of character, pullback, and entry. The same thing over here. Asia sweep, minor change of character, pullback, entry. Same thing over here as well. Now, for those of you wondering what the results actually look like, what I've gone ahead and done is actually tested this over an entire month on FX Replay. Again, if you do want to use the code for the best discount possible, check the link down below. Otherwise, you can get a free trial, completely free, and honestly, it just speeds up your backtesting to a different level. You can see over here from our analytics, what have we actually got? Our profit and loss factor. We've made pretty much 11K in that month, so 11 risk to reward. Our win rate is 62.5%. Our break-even trades, we got none, and in total, there were 8 trades. Now, you can see the average risk to reward was 2.61, but I must say, with every single trade, we were aiming for 1 to 3, and that was pretty much a mechanical take profit. In terms of our winners, you can see it even shows you where you could have potentially taken profits. Now, one thing I do want to find out is what day did I perform best on? So it does seem like Tuesday performed the best, then Thursday, then Wednesday, and then Friday. For this month, interestingly, we didn't get any trade on Monday at all. Now, this isn't usually the case. There are going to be some trades on Monday, but it just goes to show you how Tuesday, Wednesday, Thursday are always going to be the best trades for that entire sort of bit of backtesting. And you can see obviously over here, for example, just the entire month of the trades. So what I'm going to do now is we've had a little overview of what the strategy actually looks like. Let's get into every single trade that I've taken throughout this entire month of backtesting and really review it now. So now we've got our trade journal over here from this entire month of testing. Just a reminder of what the results were. It was basically 5 wins and 3 losses. Every single trade was taken mechanically in exactly the same way. Now, throughout this series of testing, what I've made sure to do is point out what pair it was, the date, how much was made on it in terms of realized profits as well, screenshot from the actual FX Replay and the trade itself. Now, just breaking this down, it is very, very simple. You want to first of all wait for that Asia range to form over here. We then look for that sweep of liquidity. Reminder, it must only be one side of Asia. We then over here got our change of character. Once we saw that pullback, all we were starting to look for, and this is where some of you are really going to wonder, how did you get the entry? It's very simple. For me personally, the engulfing candle itself has to clear out some of the structure. So if you look at this particular area over here, what I personally saw was that this engulfing candle over here did not clear the last few candles. What I really wanted to do is to act like this one. Hence why as soon as that one closed, you take a market execution, stop loss just below the low, and you always are going to aim for 1 to 3 risk to reward. Now, some of you might be asking, why is it exactly 1 to 3 risk to reward? It's very simple. I've done this over years of data, and I've realized the most optimum sort of take profit target we can actually go for is a strict 1 to 3. You could at times go down to a 2.5 or perhaps up to a 3.5 even. That works just as well. But I've seen the 1 to 3 is generally the sweet spot of this entire thing. As you can see, $3,000 was made on this, and now on to the next trade. This one over here, made on the 5th of April, 2024. Exactly the same thing. We've got our Asia range over here. We swept the high. We are now looking for our change of character, which has just been confirmed over here. The pullback, and then what? This engulfing candle was not enough for me again. It never cleared the last few candles. It was this one over here. As soon as that closes, that is essentially when I want to wait for my entry. Market execution over here. Stop loss just above the high. And then finally, that's where you want to let it run to a 1 to 3. Now on this trade, you can actually see that I only made $1,000. Now, how is that? One of the techniques that I do use is a trailing stop loss. The main objective of what you want to do when you get into all of this testing is this. You want to put your stop loss to break even ASAP. And then from that point onwards, you can take two approaches. Either you could let it run mechanically up to a 1 to 3. So the only risk is it goes back to break even or it hits your 1 to 3. Or you could potentially use a trailing stop loss that will help you reduce some of them losses or even catch some of the wins as well. In this particular example, I used a trailing stop loss. For me personally, it's one of my preferred sort of trade management tools. But as you can see, as price continues down, one leg over here it breaks, another leg over here it breaks, and another leg over here it breaks. At these points, I'm basically trailing my stop loss here, here, and then finally at this point. And this is pretty much where we were able to bag in that 1%. From that point onwards, what the trade actually went and did was it actually went back all the way to our stop loss, which is good because we managed to take some profit from this actual thing, from the actual trade. So we managed to already bag 4K of profit in only just 2 trades. Now, what we can see next over here is a managed stop loss. So instead of losing $1,000, what I made sure is I only lost 400. How's that possible? Again, we wait for our Asia range, sweep of one side. Again, this is still within one Asia range standard deviation. So still within one standard deviation, which makes it okay for me. I wait for that minor change of character, the pullback, and then finally, this engulfing candle is not what got me in, but instead is this one over here. It cleared that last order block over here. Finally, I entered right there, stop loss just below over here. And then as price continued onwards, it broke past over here, left some liquidity there. So I still wasn't wanting to go to break even at that point. As soon as price tapped back into the zone, engulfed upwards at this point, I basically put my stop loss just below that low. Because essentially what that is telling me is if the next candle is bullish, we're pretty much all good to go. It's going to go something like this. However, if price instead actually breaks down even further, then this stop loss is definitely going to get hit, which is exactly what happened. But a very good move because instead of losing $1,000, we only lost 400. Cool. On to the next one. This one was a realized 3K in profit. Again, our Asia range starting from the top to the bottom. We then got a liquidity sweep. From this point, we got a change of character. The pullback happened not so much to this kind of area, but to be honest, because I started seeing nice order flow once, twice, 3 times, I really saw this order block as a really, really good place to enter. Rather than entering straight away on something like this candle, think about it. That candle right there, and really pay attention to this little bit. It closed up like this. This is not really what I want to look for. I want to look for an engulfing candle that more so closes something like this right here. So that's exactly what we've got over here with this exact candle. As you can see, this little blue one right there. Stop loss just below the lows, and I finally let my trade go straight to take profit, and it's as simple as that. Bear in mind as well, where did I start to go to break even? You see where price really started to move over here? I basically put my break even point as soon as I saw we're starting to move to take profit, because I thought, okay, we're all well and good. Price instead came back to this area, never touched our break even, and then it just continued all the way upwards. So this is the type of thing I want you to think of. Whenever you're entering, have a little look at what the engulfing candles look like. This right here is starting to look like rejection, but this right here is looking like a really good buy candle to the upside. It's rejecting the low and starting to engulf upwards. That's exactly what we want to see. Now moving on to the next trade, we've got another 3K profit over here. Asia range moving really tight, sweep, lower time frame change of character, pullback, and engulfing candle. For me, again, this right here is not enough. It was this one over here. Why? Because it cleared pretty much all of this area over here and even this area over here. This is where I say the strategy is about 90% mechanical, simply because of the actual execution of the engulfing candle. That's really where it starts to become a bit discretionary. but still not to a level where you can call it a discretionary sort of strategy. Now, as price started to move onwards, pretty much every single time we've got a break of structure to the downside, I look at the most recent high, I put my stop loss above there. As price broke down this level over here as well, up until here, pretty much stop loss went to that area. Again, it broke it down. So now my stop loss keeps moving and moving and moving until I hit a 1 to 3 risk to reward. This for me, I found works very, very effectively. Again, it is going to be up to you how you decide to manage your trade, but I personally see a lot of success in this. Now, the next trade is actually going to be a loss. So I believe the second loss for the month. This one over here, as you can see, pretty much Asia range, sweep above the high, lower time frame change of character, pullback, engulfing candle. Now, this engulfing candle, really, when I reflect back on the trade, I perhaps should have been a bit more patient. Why is that? Because we still haven't cleared this area over here with this engulfing candle. So what I should have waited for was exactly this. Engulfing candle, pullback, and then another one that breaks this level. That for me would have confirmed it a bit more, but lessons learned, 1K loss on this entire trade. And again, you're starting to see this over here. Every time I'm entering a 1K loss, it's just a bit above, because as the account grows, we can actually take 1%, not of the original size, which was 100K, for example. You can actually set this on FX replay. I can show you afterwards. But it will be, for example, of 104,000. Let's just say as an example. So then that obviously means your stop loss is just a bit bigger than what we had in the past. Right, on to our next loss, what we've got over here. Sweep above. Then we've got our change of character. Pullback. And then this is where price really started to get messy. And perhaps really where I should have taken, again, that initiative of waiting just a bit more. Look at this. Price gave us that pullback over here and engulfed at this point. Yes, it swept this area, but this right here, all of this area over here has now created a nice demand zone that price could easily react from. What did it do? It did react upwards and then start to consolidate a bit more. So to be honest, just not the best market conditions at that point, but nevertheless, a 1K loss. And then finally, the last trade for the entire month ended up on another 1 to 3 risk to reward win. As you can see over here, what we've got is Asia, sweep below, still within one standard deviation, as you can see over here. That's exactly what we want to look for. Change of character upwards, a pullback, and then again, not this engulfing candle. We need one that actually clears a bit more structure. So this engulfing candle over here. Finally, we set our stop loss over here, take profit at a simple 1 to 3. And that is exactly how for the entire month, you're going to end up on plus $11,000 or plus 11 risk to reward. And that is pretty much every single trade throughout this entire month, broken down the wins, the losses, no break-evens for this entire month. But you can just see how simple and how mechanical it can actually become. Really, really do stick to it. And I've got to say, testing is the most important part. You know the knowledge now, it's all about taking the next step. And that's pretty much it, guys. I hope you enjoyed this entire video. It's very simple. 1 to 3 risk to reward mechanical strategy. If you do want the entire PDF down below, I've got it for you for completely free. Just click one of the links in the description. And again, if you do want to use FX Replay, make sure to use that code for the best discount possible. Really, really, it truly is a game changer. You can really analyze all your trades and see how well it performs over a long period of time. If you did enjoy this video, please like and subscribe and leave a comment down below of what you want to see next time. And yeah, guys, I'm going to catch you around in the next video. Check out one of these over here and I'll see you all next time. Take care, guys.